Hello, and welcome back to the Argyle Finance Solutions Expo. My name is Brittany Sullivan with Argyle, and it's great to have everyone joining us today. A couple of notes before I turn things over to our esteemed speaker. First, a quick reminder to stop by our sponsors' virtual booths at any time during today's event and for the following week. Our partner is committed to providing you with valuable content and a great overall experience. At any time during today's event, you can visit the virtual booth from the main agenda page, which includes complimentary materials, information, and meet and greet opportunities. To ask questions throughout the session, simply type into the Q&A chat, and we will address your questions at the end of the session. Now, without further delay, I would like to introduce our speaker, Rami Yased, Senior Vice President of Product Management at BILL. We are excited to have Rami with us for a thought leadership titled FP&A Trends for Modern Financial Strategy. Welcome, Rami, and over to you.
Thank you very much for joining FP&A Trends for Modern Financial Strategy, brought to you by BILL, a leading financial operations platform for small and mid-sized businesses. I'm Joe Fleischer. I'll serve as your moderator. What I would like to do is briefly introduce my colleague, Rami Yased, Senior Vice President, Product Management with BILL. Rami, I want to give you the opportunity to say a little bit about yourself, your background, and then we will launch into our discussion about FP&A.
I'm excited to be here with everybody today. As you mentioned, I'm currently the head of product across our BILL AP, spend and expense, and cash flow products. Prior to coming to BILL, I was a serial entrepreneur, have been in the shoes of many here where I'm running a small business or a venture-backed business. And what led me to BILL was that I actually created a software to help small businesses plan, forecast, and budget their finances. It was a forecasting tool to get people out of Excel, which BILL acquired about a year and a half ago, and we're excited that it's becoming a part of the BILL suite of services. And so FP&A and forecasting is a passion area of mine that I'm excited to talk about today.
Well, thank you so much, Rami. And I think it's important for us to define what financial planning and analysis is. So from your perspective, Rami, what is financial planning and analysis, or FP&A?
You know, FP&A to me is all about looking at your past historical financial performance, analyzing it, understanding it, and then forecasting out what the future of your financials look like based off of what you've learned in the past. So oftentimes, FP&A is really segmented into really just a forecast, but I think of it as the holistic view of what happened in the past, what are the metrics or the key performance indicators that we're going to measure the business on today, and then how do we roll the learnings from what we took in the past into a forecast that has some reasonable likelihood of being accurate, that can help us predict what might happen in the future for our business.
Well, thank you very much, Rami. And I'd love to hear your thoughts about why an organization would even consider establishing an FP&A function, whether we're talking about a standalone business or even an accounting firm that works with multiple finance teams. What is the reason an organization would establish an FP&A function?
I mean, I think all the reasons listed, whether you're growing really fast, you're experiencing changes in leadership or changes in market conditions, anytime you're experiencing change, I totally understand the reasons here that articulate the need for a FP&A. But I actually zooming out, taking a step back, you'd never go out and try to build a house without blueprints, right? You would never take on an engineering effort without actually putting a plan in place. And to me, FP&A is about, a model is really about putting in numbers what you plan to do in your business. It should articulate both how you go to market, how your unit economics, your cash flow position, everything about your business. It should be articulated in those numbers. And I look at it as the blueprint for your business. This is the most accurate blueprint that I think you could make for a business. And when things go wrong or when things are changing, you want to be able to go back to the blueprint and say, we thought we were going to do this, but instead this is happening. Why? And it's a great starting point to evolve and understand your business. Unless nothing is changing about your business, you are happy in a lifestyle business where you're not trying to grow, you are just happy in the steady state. Anytime you want to make a change in your business, I recommend FP&A because that will be your guiding light to what you're changing and measuring how successful you are in making those changes.
Thank you, Rami. Now, that does raise a question. Let's say you are looking for that guiding light or you want to establish a guiding light. What goals would you advise that organizations establish with regard to the planning aspect of FP&A?
The first and most important thing is to put the plan in place, to understand where you're going. From there, what that plan is going to entail, how you put your resources and what the outcomes that you expect to see, what the success that you expect to see by investing those resources. Right. And so that business plan will tell you what the inputs are going to be and what the outputs are going to be. And from there, you want to be able to continuously monitor how accurate you were and how accurate you where you missed. And so the ongoing monitoring of the performance and understanding of how well you're doing as a business is that last byproduct. So it kind of really starts in that dead center bullseye, and then to me fans out to say, let's put a plan. Let's see how let's all agree on how we're going to allocate resources and the impact we're going to have. And then let's measure and report back and understand. In all of this, I keep saying we, and I think that's one of the most critical places here is that it also, in doing this isn't just for just the business owner or just the finance leader. This is about bringing the entire leadership team together into a concrete plan that's written out that everybody understands and agrees on, right? And so it really creates that synergy across the entire team.
Speaking of synergy, there is the saying oft said, you can't manage what you can't measure and vice versa. With regard to establishing synergy on what the goals are and what quantifiable goals are, what would you advise organizations include in a plan? I recognize we could devote a whole webinar just to this alone, but what are some key metrics to keep in mind?
Well, so I think there's a couple of key pieces that have to fit into every model, right? The first is what are the inputs? What are you spending across what different departments, what different segments? But putting budgets in place to understand your inputs, I think is critical. Right. And I break out hiring plans from budgets. For most small businesses, people make up the majority of the expenses. And so understanding people as its own driver is often really important. And so I really break out hiring plans and separate it out from COGS and software and all of the other expense items. And then what's the output from those inputs, right? How much money do you expect to make? That's the next critical part. Now, the fourth item here is where I think a lot of people miss. They stop maybe at the first three, but they forget to look at cash flow. And in this day and age, just because you're making money doesn't mean the cash flows are flowing in properly. And so you want to keep a really, really close eye on that. I will say from personal experience in one of my businesses, we collected cash annually up front. And we knew that we were growing revenues, but because we didn't do a good job of forecasting our cash flows, we actually experienced several cash crunches when our accounts receivable took longer to collect than our accounts payable. And so understanding your cash flow is a critical part, I think, to making sure that as you grow, as you scale, you continue to have a healthy balance sheet, and you don't face any unintended cash crunches. And then the last part is you want to understand what are the metrics, the KPIs that tell you you're doing well. Where are the leading indicators that tell you that you're on the right track or the health of the business? And this is different for every type of company, right? If you're a software as a service company, for example, some key indicators are, how much recurring revenue you have, or your customer acquisition costs, things like that. But if you're in healthcare, it's going to be different. If you're a nonprofit, it's going to be different. These KPIs are really tailored to your business, but they're really important. They're going to be the first sign that something's going right or something's going wrong. And you want to make sure that you keep a close eye on those and not just wait till the revenue misses. You have some sort of indicator of what's happening now versus waiting to the future to see that something went wrong.
Thank you, Rami. Now, when we were talking about different metrics, and by the way, if attendees are wondering, KPI stands for Key Performance Indicators. When we were talking about metrics, you did bring up the term driver, and I do want to acknowledge that there are some trends, and these are long-running trends, frankly. We'll elaborate on them. Predictive analysis, financial planning and analysis, and where the analysis is forward-looking ultimately. What if modeling and scenario planning? We'll talk about that. We'll also talk about, given Rami, your reference to the use of the term driver-based planning as well. That said, is there anything you would elaborate on before we dive deep into each of these aspects of financial planning and analysis?
One of the things that I think has evolved over the past couple of years has been software. Both software to do financial planning, but also software to make it easier to pull data out of your different systems, to consolidate data together in the cloud or on, even in a spreadsheet. You can now write macros, for example, to extrapolate all the data from your ERP and your CRM, et cetera. Because of the capabilities of software, the shift that's happening, in my opinion, in FP&A is going from FP&A professionals focusing the majority of their time and effort on data consolidation and backwards looking reporting to shifting their time and effort to be more forward driven, right? And that forward driven focus and attention is really where the biggest value comes in for FP&A. That's what preps you for the future. It used to be that you create a model once a year or once every 6 months, and then you just report on it. But now you can stay up to date with the model a lot easier. And so now you can reforecast every quarter or every month and do things like do what if scenario planning across the future outlook, or get better about predictive analysis. There's a lot of great algorithms that are available both in Excel and in software that can pick up AI or statistical models and predict what the future might look like so that you can get more accurate. Or software now makes it a lot easier to do driver-based planning, where, for example, your software can be connected into your ERP and your HR software and your CRM and automatically pull in your headcount. And then you can simply do a basic formula that says, for every salesperson I hire, increase their, my revenue expectations by X. And it'll just happen automatically. Those types of conditional logic or drivers that to do historically in Excel would take a lot of time and effort and waterfalls to build out. But now software is making it that much easier. So the more that you lean into the forward-looking stuff, I think the better that your business is going to be, the better you become as a thought partner to the business if you're heading up FP&A. And that's what I think the biggest trend that's happening now in the industry is the use of the software to allow you to do that.
Well, thank you, Rami. And we're going to elaborate on developments with regard to financial planning in particular. And I assure attendees later on in our webinar, we'll also talk about the role of technology. But with regard to best practices in financial planning, I want to start off with something you mentioned earlier on, Rami, and that is data. And in particular, what we need to keep in mind, especially for organizations that are accustomed to looking at data as something that simply records the past. What can organizations do with regard to financial planning and analysis so that they can learn from and think ahead when looking at data?
Well, two things about data. One, you want to make sure that you take the measures needed to make sure that your data is clean, right? Garbage in, garbage out. The old saying goes. And so it's really, really important that you clean up your data sources. But once you have clean data sources, I think the biggest thing to think about here is, how do I leverage more data? It's not just about what's in your general ledger anymore. It's about what's in your CRM or a point of sale system. It's about what's in your actual application, or what other data can you get from your marketing team and your sales org and your engineers across the board. You want to pull in as much data as possible to create the most accurate both forecast and understanding of what happened, right? The thing that I mentioned before, and I'll say again, there are a lot of tools out there to do data aggregation or do FP&A that have built-in data aggregation. So take a look at the tooling that you're using. If you're spending more than a couple hours a month consolidating data, bringing it together, cleaning it up, transforming it so that it's usable, then you haven't spent enough time really thinking about this problem. This should be automated as much as you can, both the download of the information, the consolidation of the information, and the transformation of that information to make it usable. Ideally, even your monthly reports get to a place where they're fully automated.
Now, we've talked about data. Related to that, and we mentioned this earlier, is what if modeling and scenario planning. So when we look at financial planning and analysis, we're looking at a multiverse as opposed to just a static budget. I'd love to hear your perspective on the multiverse as it relates to financial planning and analysis.
I know myself as an entrepreneur, and I think a lot of business owners might this might resonate with. I am typically more optimistic about the future than reality. In fact, for most, building a small business is hard. I think if we all knew how hard reality was, most of us wouldn't actually go out and build a new business, right? And because of that, I think that financial planning and building a model is a great point in time to help us prepare and think about what typically we don't. We typically, I think, as entrepreneurs, think about what's going to happen when everything goes right. But what I like to do is I like to make sure that I have all my bases covered. And so I start with, what do I think is actually going to happen? That's my base case. And then I say, in the best cases, if I thought like everything went my way, what would I change to make it the best case scenario? And in doing that, remember, it's not just about changing the output. It's also about, hey, you're probably going to throw off more cash than you thought. You probably are going to maybe deliver faster or have less costs. In any of those cases, what would you do with those proceeds, right? What would you do with that extra cash? Reinvest them, tweak the model so that you continue to invest those things, and that builds out the best case. Now do the same thing for the worst case, right? What if things took twice as long to deliver? What if we sold half as much? What if, start compounding the worst case scenarios. I don't think you need to go as far as trying to predict COVID. I can tell you nobody in their financial model had COVID on the 2020 bingo card. But outside of black swan events, try to compound those worst case scenarios, but compound them and tweak the model again so that your business doesn't die, right? If you're not selling as much, well, what do you have to do? You probably have to have less salespeople or less costs of sales, right? Whatever it is, you want to make sure to tweak it so that the model still works, that the business is still viable. Now, when you start comparing all three, what I typically find is that my base case is here, my best case is slightly better, and my worst case is significantly worse. And then just the exercise of building those three scenarios, I can recalibrate my base case to be somewhere in between my best case and my worst case. It's the best way that I can trick my mind into thinking less, to start viewing the world with a slightly less rose-colored glasses. But what I've done in that is now I have a spectrum, right? If we've done our model right, if we've built a dynamic model that can adjust to the inputs that you place, now we have an entire spectrum of opportunity. So if things were slightly better than I thought, than my base case, then I already know what things I can reinvest in, what things I can tweak. I've already built out that model. I just have to adjust it. If things get worse, I already know where I'm going to pay back or pull back, right? So that exercise to me is a great way to have optionality and be ready for what's up ahead. The only other thing that I think worth mentioning here is, as certain events are going to happen, certain things are going to happen. You're going to have a new launch. You're going to let go of a certain person. You're going to have some sort of change. You could come in and say, let's build a couple of different scenarios around this point in time, this actual consideration that we know is going to happen. And so that is another way that you can use scenarios to help you be ready for what's up ahead.
We've talked about scenarios. When we consider what influences scenarios, we consider drivers. We could probably dedicate a whole webinar to driver-based planning, but for members of our audience who are not familiar with it, I wanted to give you the opportunity to briefly talk about driver-based planning and what it means in the context of financial planning and analysis.
Drivers are the things that are going to impact another number, right? And so it's an input that impacts an output. And that can come across, or it could actually, to be fair, it could be an output that impacts an input, right? And sometimes they're recursive in certain circumstances, right? One basic example that I always have in most of the businesses that I've built is that salespeople drive revenue, right? So the quota that salespeople have is what I'm going to forecast my revenue off of. And so the more salespeople I hire, the higher my revenue growth will look like. And so to drive my revenue forecast, I tweak the number of salespeople. Now that revenue then is a driver in itself for two other things, one of which being the number of support people I need to support my customers, the costs of delivering my goods to my customers altogether. So salespeople drive revenue, revenue drives costs around the cost of sale. The other thing that I always tweak in there is that revenue also drives marketing expense. Now, why marketing expense? Marketing expense to me is the fuel that feeds the salespeople. And so that's what I mean in that it can be recursive. You want to make sure that you always feed your salespeople, depending on your business model. But in that case, I have to create a model where it understands that the more revenue I have, the more revenue I expect to make, the more salespeople I have, the more marketing dollars I need to also invest to feed those salespeople. So that's what we mean by drivers and an example of that. What you want to do with drivers is identify the key ones, right? There's going to be some key cost drivers. There's going to be some key revenue drivers. You want to be able to put them all on a single sheet. The KPIs, the assumptions tab of your typical spreadsheet. You want to be able to have all of your drivers listed there in one sheet that you can tweak and go look at the different tabs to see how they impact those different tabs. You want to be able to articulate those drivers to the entire business, and you want to be able to understand how well those drivers and those ratios are working out. If you have, too many, that's going to be overwhelming, right? If everything is a driver, then it becomes a little too much to tweak and keep track of. You want to make sure that you focus on the ones that are meaningful to your business, right? That can move the needle on your cash flows, on your revenue, on your expenses by plus or minus, at least 5%, right? If it's sub 1%, then it may not be a really good driver. It may be something that you just want to kind of trend line out. Understanding alignment around these drivers, right? Making sure that everybody understands these drivers, right? Your sales leader, you want to make sure, for example, that the revenue attribution that you put per salesperson, the revenue leader understands and is aligned to in terms of how much they're setting their quota to, right? And so oftentimes you see that if a quota is $500,000 of sales for a salesperson, you may want to discount that to create the driver of maybe each salesperson brings in 300,000. Right. And that kind of alignment, that kind of dialogue is really critical to make sure that you have a good, healthy model and that you're optimizing for those drivers in the business. I think of most models having a half-life of about a month, about 30 days, meaning that every 30 days that go by without the model being updated, the accuracy and the value that you're going to get out of your model decreases by half. Right. And so when you talk about 3, 4, 5 months in and you haven't made an update to your model, chances are it's pretty much useless at that point. Now that there are nuances depending on your business, but I think it's really important to update your model every month. That's where you're going to get the most value out of it. That's where you're going to find those lessons in introspection around what went well and what didn't. And so creating the automation to update the model automatically is really, really important. Now, the other things that matter in terms of time is how far out you look. I see a lot of business owners or entrepreneurs get really excited about far out into the future. At the end of the day, the American dream is to start a business, and we're all dreamers. And so, we want to look out 3, 5 years in advance and look at those big numbers and say, hey, look at the big business that I'm going to build in the future. In reality, I've barely been able in my career of almost 2 decades now, I've barely been able to get a 12-month forecast to be plus or minus 30% right 12 months later, let alone a 5-year forecast. You want to be realistic in where you invest your time in terms of your modeling. There's a really famous quote that all models are wrong. Some models are useful. And this is the point here. It's not about, dreaming. This is about a tool to use in the now. And so keep the length of your forecast really relative to how long you think things materially change in your business. If a year from now you look different as a business, then try to forecast a little bit past that, 50% more than where you think things are different. Typically, I see about 18 to 36 month forecasts are about the extent that you need. There are obviously exceptions to that. I've seen nonprofits where there's a very steady forecast, and you have to think maybe 10 years in advance there. And then the last piece in terms of time is really about how you think about those updates. Do you want those updates to just update the actuals, or when you update those actuals, do they then automatically reforecast what the future looks like? The most dynamic models, the most useful models are the ones that take into account what actually happened and reforecast based off of those drivers updating automatically, right? And so you can create drivers or ratios to understand what our conversion rates are, what our sales numbers are per person, et cetera. And it takes those actuals and automatically rolls everything forward to make the model more accurate. And I think that is a really helpful tool for finance leaders to use.
I'd love to hear your thoughts with regard to what a financial planning cycle entails.
It is constant and it is iterative. That's why you see the wheels kind of go spinning around here. But it starts with trying to figure out what does the future look like, right? Anticipating what the future looks like, then measuring the actuals based off of what you said was going to happen, and then changing your plan, refining the inputs, and then if needed, adapting or changing course to what that future looks like. This is a cycle that you do every time you update your model. As you get the newest actuals of information, you want to not just report back on what happened, but you want to go through this cycle of, hey, what did we say was going to happen? What actually happened? How do we refine the future? Or do we need to pivot or adapt altogether? These are questions that you should be asking every time you update that model.
Now, in addition to considering the model, there are the skills that members of the organization have with regard to applying that model in the broader context of financial planning and analysis. What would you say? We won't be able to cover every skill in detail, but what would you say are some of the core skills organizations must have to sustain an effective FP&A function?
The biggest takeaway here that you called out subtly here is that this can be an organizational effort. It does not have to be a single person, right? And so the storytelling can come from the CEO, whereas the modeling and the data analysis might come from software. And the business acumen and automation comes from the controller, right? So this is a team effort that can be augmented with both other members of the team, not just the finance professional, and or tools to help you kind of pull this all together.
And you made a great point, Rami, when you talked about FP&A being a team effort and also entailing the use of a variety of different types of resources. With regard to communicating what one either aims to learn or continues to learn from the discipline, the exercise, if you will, of financial planning and analysis, what are some key aspects of FP&A that organizations need to communicate internally to make sure that there is a process in place to reinforce learning and planning as part of the culture of the overall organization?
I think it's important to know that this is a team sport, and anybody that has ownership over an input or an output, right? Either a budget or a result should have the right to weigh in on this. What I often see as a mistake is that the CEO and the finance leader put together a goal and a plan and then just deliver it to the company and say, here you go, here's where our goals are, and now I want you to go execute on it based off of the budget that we've given you. And that's hard to create both buy-in, but it's also hard to get those numbers right. And so you want to bring the team in if they are responsible for sticking to a budget, then or if they have results that they're accountable for, they should have the opportunity to weigh in on at least one or the other side of that, right? If you want to set the goal about what the results should be, then they should be free to tell you or weigh in on how they're going to achieve those results, what resources they need to achieve those results. If you want to do it inversely and you want to say, here's what I can give you in terms of resources, then they should be able to weigh in on what results they can produce based off of the resources that they are giving you. They're going to have the most historical insights. They're going to be able to give you the context around why they think those things, and you can challenge them on it. You don't have to take it, at face value, but it is a conversation that needs to happen.
Absolutely. What are some key considerations with regard to modeling in connection with financial planning and analysis?
Yeah, I mean, if you've brought people in, if you've gotten people to weigh in on the inputs and outputs of the model, the result is going to be that you have buy-in across the team and a shared vision that everybody can own, right? They are now accountable. There's a higher sense of accountability, but there's a better conversation that ensues. You will understand each functional area better, and having those conversations and understanding why their positions are what they are. But other team leaders, if you have those conversations in an open discussion, then other team members are going to understand the functional areas better as well. And so the best that you can, right, not only create that, bring everybody in for the initial planning, but maintaining transparency across as time goes on the models is really going to help make sure that everybody is aligned and on the same page. You can't always do that, considering that you might want to build in a downside scenario where you fire half the company. Maybe that's not one that you want to expose to your team to show who makes the cut and who doesn't. But the best that you can, you want to try to maintain transparency. We talked a little bit about automating of the data going into your model, right? And so that is from a bunch of different disparate sources. There are plugins, there's software, even a lot of the tools themselves make it really easy to download data and aggregate data together, whether it's building a macro or using a plugin. You should have no difficulty in automating the data ingestion that goes into a model. I've gone as far as asking ChatGPT to write me a simple macro to do the data manipulation. So if you feel like this is an area where you're not fully automated, invest a month or two into doing that, because it will pay dividends moving forward. The other two areas that are really important are automating the outputs of that data aggregation, right? The reporting. You should be able to click a few buttons or run a couple of macros and get an output report that you need to get everybody up to speed. Right. And that's not just, your 3-statement model, but that's also your budget versus your actuals, your BVA analysis, right? Your anything specific to your departmental, right? If you want to separate out departmental budgets and send those out, your revenue reporting, your rev rec, any of those things that you want to report on a regular basis, make sure that that's automated. The last piece, I think it's really critical to keep the team aligned, is having dashboards, right? Being able to have a really simple, easy visual way that people can log in and get the key numbers that they need at a glance, without having to pull up an email or a bunch of spreadsheets. Dashboards really help make sure that we're all talking about the same key numbers and the same key KPIs.
And with regard to automation, there are a number of tactical considerations. Just briefly, I'd love to hear your thoughts about the tactical considerations of automating financial planning and analysis.
The easiest way to do this is to take a look at any given month as it relates to FP&A and understand what you're spending your time on, right? Really set a little stopwatch, a little timer to say, I'm spending X amount of time on this, I'm spending Y amount of time on that. And if anything's taking more than a couple hours a month, to really step back and say, hey, can I automate this? Is there a way that this could be done automatically? Obviously, there's a lot of things that you want to be cognizant of in terms of data security, data privacy. You don't want to accidentally share too much data with the organization or share data with a company that you don't know and trust. But most systems now integrate with each other. Most systems allow some lightweight way to consolidate information. And so really, where you find your time being spent, after a couple of months of finding that repeat pattern, step back and say, hey, can I automate this? Can I use AI? Can I use some sort of workflow to do this instead of me?
And when we talk about prioritizing, certainly finance leaders, CFOs, controllers, and other finance leaders need to prioritize strategic thinking as opposed to tasks. So I'd love to hear your thoughts just briefly once again about the role of automating or the effect of automating FP&A on the leadership, and especially finance leadership within an organization.
This is really the value that you're going to get out of investing in those tools, investing in automation. You get to shift yourself as a finance leader from being either the budget keeper, which you're chasing people around and yelling at them for missing budgets and trying to keep everybody on track in terms of budgets, or just the report maker where you're just spending all your time pumping out reports. It allows you to shift your skill set and your perception in the business to being the strategic leader that you can help the company and the business owners and each of the functional owners understand their area better and help them strategically optimize the future of what they need to do. This really is transformative for most careers that I've seen, where it allows you to become the right-hand person of every single leader in the company to help them understand, communicate, and make the best decisions possible.
And finally, Rami, what are some key takeaways finance leaders ought to keep in mind?
Reminder, FP&A, it's about taking a look at the past, understanding the numbers, the moment in time, and the KPIs and the moment in time that you exist in today, and then using that to inform your future plans. You want to do this in as automated of a way as possible to get the data in from the past, so you can spend your time thinking about the future and communicating what's up and coming, what's to come. And hopefully, if you do this properly, you could be prepared for any potential scenario that comes your way, and have a healthier, more vibrant business.
We have time for at least one question from an attendee. What can one do when applying the discipline of financial planning and analysis? What can one do to think through potential situations, even if one doesn't know exactly what those are going to be?
I like to look at the spectrum of both drivers and milestones in the business, and really handicap the major ones. So examples are, a driver is a salesperson produces X amount of revenue. What if I handicap that by half, right? Where my salespeople aren't as productive. Or a milestone example could be, I expect to get this grant by this date, or I expect to release this product by this date. Those types of milestones. What would happen if you got half that grant? Or what would happen if it took you twice as long to deliver that product, to get that product to market that you anticipated it would be? So I would take a really critical lens at all the drivers and all the milestones that I have in the model, and I would handicap multiple ones together to compound into a worst case scenario. What you've done is created the output of that, right? Like, if something bad really happened in the world, what is that going to mean for my business? Well, that means that these things that I was counting on happening didn't happen. And so, or didn't happen as efficiently or as on time like I thought they would. And that's what I do personally to help me get better prepared for that unknown future.
Thank you very much, Rami, for sharing your expertise, and wanted to thank attendees for joining us for our webinar brought to you by Bill, a leading financial operations platform for small and mid-size businesses. We do appreciate your time, and we hope you enjoy the rest of your day.
Thank you again for such an incredible thought leadership. I also want to thank everyone else for joining us today. This session, along with all of today's content, will be made available on demand following the event. Our next session will begin after our short break at 12:35 Eastern, which will be a keynote presentation titled Budgeting and Managing Cash Flow for Success. We look forward to seeing you there.